Backtesting is a complete waste of time for majority of traders because they're doing it incorrectly. In this video, I'm going to show you exactly how you should approach backtesting from a psychological perspective to ensure that you're not wasting time doing things that won't get you results as a trader. And you can be as efficient as possible so that every hour you spend backtesting directly translates into profitable trading. So without further ado, let's get into this masterclass. Most traders are backtesting incorrectly. And as a result, they're building a false sense of confidence in their trading strategy. And worse yet, they're building a false sense of confidence in their own trading abilities. And what a lot of traders are doing, majority of traders are doing, is they're utilizing hindsight and confirmation bias, meaning that they're only going back to positions that were winning in the backtested data. And they're having a look at those setups and they're using that as confirmation to the fact that their strategy is profitable. And they're not looking at the scenarios when their strategy wasn't profitable and didn't play out, and maybe when they would have taken a position that didn't play out. And there are a lot of factors in the real life condition that just can't be emulated in the back-tested market condition. And even if you're being 100% honest with the replay tool when you're back-testing, that still can't take into consideration all the factors that you'll be experiencing when you're trading in the real life condition. And backtesting tends to happen very quickly, and it tends to be, you're focused in the market, you're in the flow, and then when you come to trade the real life market, you realize that each of those candles actually take a very long time to form, and you get taken out the flow, and there are a lot of factors there that you can't take into consideration. And this is the biggest reason why majority of traders cannot replicate their backtested results in the real life condition. But when we talk about how traders and why traders are backtesting incorrectly, it comes down primarily to confirmation bias. They're only going back to find reasons why their strategy is profitable. And it's very difficult to, once you spend a lot of time investing into a strategy and studying a strategy, and when you're in a community that just talks about how profitable this strategy is, it's very difficult to entertain the thought of anything else but that. And it's very difficult to hold yourself accountable to recognize that this strategy and every strategy has flaws, it has risks, it has times it doesn't work. And it's very difficult to even entertain that thought of that belief. So be aware of confirmation bias. Recognize that when you backtest, don't just backtest to build a false sense of confidence in your strategy. Don't just backtest to prove that your strategy is profitable. Make sure you open your mind and you recognize that the importance of backtesting is to try and give yourself the best, most well-rounded understanding of your strategy, recognizing that sometimes it has periods when it's going to be profitable and it has conditions where it performs very, very well. But there are also going to be conditions and periods when your strategy doesn't perform well. And when you backtest, you have to be aware of those. You have to figure out the flaws and the holes and the times your strategy isn't going to perform well so that you can put things in place to manage that and to mitigate that, which we're going to talk more about in this video. And as a result, because of confirmation bias, because traders only go back to find when their strategy is profitable, they build, majority of the times, a false sense of confidence in their edge, in their strategy, in their trading abilities. It's not replicating the real life market condition. And most importantly, they ignore where their strategy doesn't work. Okay, so be aware of this problem. This is what we're going to talk about in the next few slides. So what I encourage every single one of you to do when you approach backtesting is to use backtesting as a way to develop your edge and to then put your edge into a mechanical trading plan. This is one of the biggest benefits or advantages of backtesting, if it's used correctly, is to go back through previous trading data to be able to pinpoint an edge and to be able to see whether that edge is profitable or not, and then to be able to take that edge and put it into a mechanical trading plan that then you can trade into the future. So always backtest with intention. Always backtest for a very particular reason. A lot of traders say I have issues with motivation and discipline and focus when I backtest, and I procrastinate, I don't follow through with my backtesting. A lot of the times it's because they don't have a very good reason to backtest in the first place. So one of the biggest advantages to backtesting is helping you develop your trading plan. I encourage every trader to backtest with the intention of developing a trading plan, each component of your trading plan, your entry, your management, your risk. There are three things to backtest and to master, and those are the three things I just mentioned. When you're trading, you need to figure out how you're entering into the market. You need to figure out how you're managing your position. You need to figure out how much you're risking. And there are subcomponents to each of those three things. But when you backtest, you want to go off and master those three things. So when you're backtesting with the intention to figure out exactly how your strategy sets up for you to enter. And you create a checklist and you put that into your mechanical trading plan. And what you want to be doing is mastering those three things. Now I have a free tool for each and every single one of you. It's the trading template that I pass on to my six-figure traders to help them organize their edge into a mechanical trading plan. It's a completely free tool. Check the first link in the description, go in there and download that and use that. Have that up on your computer when you're backtesting, because what you're going to do is you're going to go off and backtest the markets, and everything you find relative to, say, for example, the entry, you're going to go and fill in that template. And that template there is going to help you have intention when you backtest. That template is going to help you know exactly what to look for when you backtest, because that template is going to help you create your trading plan and develop your edge. Then you want to also, after you've filled in that template and you have your entry, your management, your risk components, and all the subcomponents that I put into that template, you then want to go off and disprove your edge. You want to go, now that you have your edge, you want to go backtest again, but you want to backtest with a completely different mentality. You want to backtest this time with the idea that I'm going to find every single reason why this edge won't work. I'm going to find every single flaw and hole in this trading plan to disprove this edge and find everywhere it will fail and everywhere it will not perform in the markets. What this helps you do is it's almost like a double blind test that helps you break that confirmation bias to this belief and this bias that my trading plan is superior and it's great and it's performing very, very well. Now you want to go and figure out where it doesn't perform well. And after you've done that backtest, the disproving backtest, you're going to have a list of reasons or a list of scenarios or a list of market conditions where your strategy doesn't perform well. And then what you want to do is you want to ask yourself, okay, in these scenarios, how can I lower the probability of me falling prey or victim to my strategy not performing well? And what can I do in these scenarios to help manage risk? And what can I do in these scenarios to still be profitable, to be more patient and not trade? Should I risk half in these conditions? Should I not trade at all in these conditions? Should I trade a different strategy in these conditions? For example, a strategy that you have may perform very, very well in a trending market, but then what you fail to neglect when you're backtesting the first time around is that in the choppy market condition, your trading strategy doesn't perform very well. But when you go and do the second form of backtesting, when you disprove your edge, then you're going to bring that to surface. You're going to recognize that in choppy market conditions, my strategy doesn't perform well. And as a result, I need to do things differently in the choppy market condition, whether risk less, not trade at all, or trade a different strategy. Okay, so you're always backtesting with intention. The first round of backtesting is to fill in the trading plan template I gave you. The second round of backtesting is to disprove that edge and find every single reason why it won't work. And then you want to go in there and put contingencies and plans in place to deal with every scenario when it won't work. Hope that makes sense. And like I mentioned, download the precise template in the description that has each of the components that you need to find to ensure you have a profitable edge. Then, at the end of the day, none of this will matter. The backtesting, the developing of the edge, the development of your trading plan, none of that will matter if you come to the market and you don't actually stick to that edge. If you haven't managed your psychology, if you haven't managed fear and greed, and you don't know how to manage fear and greed when you're trading so you can stick to your trading plan, then none of this matters in the first place. So what you want to be doing now is recognizing that fear and greed is what's going to stop you from executing your trading plan. Fear and greed, at the end of the day, needs to be mastered to make your backtesting worthwhile. So fear and greed will take you away from your execution of your trading plan. It's now important to manage those components so the hard work you've put into backtesting can actually translate into real life market profits. And the easiest and most applicable action step that you can take from this video right now and implement to ensure that you manage fear and greed is managing your expectations. If you create ideas in your mind of what you think is going to happen next when you're trading, and you create all these fantasies and expectations on what you think the market's going to do next. For example, $1 is going to get to this price in this amount of time. I'm going to make this amount of money. It's going to help me pass this funding challenge. Whenever we create outcome-based expectations of what we think is going to happen next in the market, you now have greed over those expectations, and you simultaneously create a fear of losing those expectations. So what happens is when you create an expectation is you also birth fear and greed in your mind. And now you activate the amygdala, you activate the emotional part of your brain, and you become more of an irrational, amygdala-driven individual that's more impulsive and instinctive in the market, as opposed to a trader who's poised, doesn't really, isn't addicted to an outcome one way or the other, but is just looking at their trading plan, looking at the market, and executes when the market presents an opportunity. So if you create outcome-based expectations in the market, you significantly increase the probability of deviating your trading plan and going away from your trading plan because of fear and greed, because you're now run by the market as opposed to you being poised and executing when the market presents the opportunity. So the easiest way you can manage fear and greed is by managing your expectations, becoming aware of any expectations you have on the outcome and grounding those before you get into the position. It's about having an awareness of the expectation and then recognizing that nobody can predict what's going to happen next in the market, and using rational thought to ground that expectation, and then recognizing that, nobody has any idea what's going to happen next in the market. There are just too many factors. Who am I to think that I can predict what's going to happen next? And the mindset you want to get yourself into is, I don't care if this position's a win or a loss. I'm taking this position because I know if I do hundreds of times, I'm going to end up profitable at the end of that larger sample space, because I'm adhering to my trading plan, and my trading plan is an edge developed over my backtested data. And when you go and backtest, you backtest a large sample space of data, hundreds if not thousands of trades. Some of those trades are wins, some of those trades are losses. But with proper risk management, with proper risk to reward, you end up profitable after that larger sample space. And as a result, all you have to do as a trader is adhere to your trading plan. So it's now about managing those expectations, grounding those expectations. And I've created a free Bulletproof Your Mindset tool. This is the second link in the description below to help you ensure that now that you've backtested your edge and you've put that into a mechanical trading plan, now you need to stick to it. Use that Bulletproof Your Mindset tool before every single trade. It's going to help you identify, ground unrealistic expectations, and it's going to help you adhere to your trading plan. And you're not going to be emotional when you trade if you use that tool. And this tool has been a crucial factor in my students achieving an accumulated $5 million plus in funding. It's been a big factor in their success with that. So make sure you go in there and download that tool. It's completely free, and you start implementing it before every single trade you take. Backtesting is a waste of time for the majority of traders because they don't do it correctly. And also, if they do backtest, they do develop an edge, a lot of traders just spoil that edge with a poor mindset. So implement intentional backtesting to fill in the trading plan template that's in the description. Then go in and disprove that edge so you're prepared for times your edge doesn't play out and you have contingencies in place. And then utilize the free mindset tool to ground outcome-based expectations so you can stick to your trading plan and you can build consistent profitability this year. You can get funded, you get payouts, etc., etc. If you like this video, please like, comment, and subscribe. Please share it with your trading friends and trading communities. I look forward to seeing you all in the next video.